You're listening to the Big Three of B2B Leadership podcast with Mike Faherty, where world-class business leaders share their secrets for personal, organizational, and market growth. Gain powerful insights from industry leaders that have been tested by the fire.
All right, well, welcome to the Big Three of B2B Leadership, where we invite industry leaders to share their insights on personal and professional development, developing and maintaining operational excellence as an organization, and of course, expanding your company's position in the marketplace. My name is Mike Faherty. I'm your host. Today, I have the pleasure of being joined by Anthony Cardell. Anthony is the CEO of Valuation Consulting and Advisory. Anthony helps manufacturing owners understand and maximize the value of their business. He performs business valuations, develops value growth plans, and performs quality of earning engagements for a wide variety of industries, not just manufacturing, but a number of other industries as well. Anthony has spent 30 years studying and learning about accounting and finance, and he also has a CPA and is also a certified fraud examiner as well. So I'm really excited to talk to Anthony today. Welcome, Anthony. Thanks so much for joining me.
Thanks for having me, Mike. I'm excited to be here.
Awesome. Well, look, before we get started, you just have kind of an interesting story. So I want to talk about valuation. We're going to spend a lot of time on that, but I want to kind of go back a little bit to the beginning. I know you and I have had conversations in the past, and you shared some of this story with me, but you began studying finance while you were in the Army. Is that correct?
So I've always known accounting has been an obvious gift. I took my first accounting classes actually way back in high school, but I joined the Army in an attempt to help pay for college. Right? The GI Bill is a big part of why I'm here today. You know, where I am today. But I did do a lot of my accounting homework on the back of the tank, trying to read my accounting book with machine guns going off and all that. And you study under that kind of environment. It doesn't seem so bad when you have this nice office with a window. But yeah.
That's awesome. And I know that wasn't easy, right? Because you were overseas for some of your deployment. Is that right?
So during my Army career, I was stationed in Germany the entire time.
Okay.
And back then, there weren't a lot of colleges that offered online, especially for accounting, right? So there weren't online programs. So yeah, that was a bit of a challenge. You're 9 hours ahead and you're on the other side of the world. It was definitely a challenge trying to get help if I had questions with my homework.
I bet the guys in the tank weren't a lot of help often.
No, not usually. Not with that.
Right. So as you're going through this, obviously you said you used your goal was to help to join the Army and help support and pay for your college education. So obviously you had a plan in mind. What was the dream? Like what was the big idea that you were putting all this effort towards? Did you want to become an accountant? Did you want to become a CPA? Did you want to own a business? What were you thinking at that time?
Well, I knew I wanted the CPA. It's almost a natural progression. If you're going to do accounting, getting that CPA really makes a big difference as far as what you can do. And the world's still wide open. CPA nowadays is just like accounting, but I've known people that have traveled the world with a accounting degree. It's pretty amazing, all the different fields that you can do. But accounting is the language of business. So having that accounting background really helps you understand a lot if you understand how to read financial statements.
So as the owner of a CPA firm, at one point, right? So you started your career working at a firm that you eventually owned a CPA firm. Is that right?
That's correct.
Right.
Yep.
So you're doing accounting, you're doing taxes for businesses and business owners, I imagine at that point. So what got you interested in valuations?
So just for clarification, I never did tax.
Okay.
So no tax questions, right? There's other people that do that. I did audit. I was an audit guy. Only strictly audit. And I'd been doing it for years and years. And I had a client that had asked me to do a valuation. It was like a hospital chain, and they had doctors buying in, buying out. So I helped with that, but I'd never done one before, and this was like a simplified engagement. So it's not like I had to testify in court on this. But the more I learned about it, the more I just thought, wow, this is so interesting. And one of the great aspects of doing valuation is I often get paid to learn, right? So whatever industry it is, even if it's manufacturing, all these little tiny niches that I know, I just learn more and more every day. And that's for me, that's really fun, being paid to learn.
So what's the difference between a CPA and then someone who's got an accredited business valuation designation? Like, what's the big difference between those two? Can any
So
CPA do evaluation?
most CPAs, they technically can do evaluation as long as they follow CPAs have standards, right? So as long as they follow the statement on standards of valuation services, they can do it. What the accreditation of business valuation is that I took the time to go through the courses, take an exam, just like the CPA exam, that says, yes, this person knows how to do business valuation properly. That is one of the things that makes me a little bit different, in that I only do business valuation these days. I'm not, trying to do taxes, and I do valuations on the side. I find that finding someone that focuses on that is important, because when someone comes to me for a valuation, something's going on, right? Something important is going on. And you don't want to be someone that dabbles for someone that's making, probably are experiencing a important moment in their life.
So give me an example. What are some of those moments? What are some of the drivers for needing evaluation?
So my most common reasons from clients is a divorce. They're exiting their business, right? So this is their retirement. This is their nest egg. This is what they're going to try to live off for the rest of their life. It's important that you get that right. And then estate planning is another, or I say planning, but maybe that person's already passed away. So this is going to the IRS. This is to help sell the business after the owner has already passed away. So you need to get that price right to take care of that person. And then also buying a business is another one that I do I do that very often. And then there's also dissolution, right? There's some sort of, it's kind of like a business divorce, right? You're getting rid of a partner, or the partner wants to go separate ways. How much is this business worth to do that? And that's hard. I mean, you're trying to run a business and then a partner exit at the same time, not always on the best circumstances. It's a lot of stress on a business owner.
Right. So whenever there's a separation of maybe business partners, how's that work? Does every member hire their own valuation company and value the try to establish a value for the company independently?
I would hope not. I'm sure that that's happened before, but usually what I like to do is get the business owners together on the same page, right? I'm going to come in here and I'm going to do a fair market value of your business. We're going to sit down and we'll discuss what the value is and why it's that value, right? So if I can get everyone to understand why this business is worth X, then that's something you don't want to have to pay for over and over again. Hopefully, if they do that, the values aren't too far out of line. But yeah, that's always the goal, because it's sometimes hard, right, for a business owner to come to terms. They think the business is worth 10 when really it's only worth 2 or less sometimes. But it's necessary, and it just kind of is what it is.
I imagine most of the customers that come to you or business owners and CEOs that come to you probably start the conversation with, well, I know how much the company's worth. I just need someone to document it for me. How often is that the way it starts?
Um, not too often. It really kind of depends on what the circumstances are. Some of them really have a very good feel. And I would say that that's like maybe more smaller businesses that understand the market, that maybe have bought one before, right? Like, and that there's a lot of them. But the niche ones are sometimes a lot harder to value because there isn't as much competition, right? So like say a staffing company, well, there's probably 500, maybe more staffing companies in Houston, and they all sell for about the same thing. So your value is going to be somewhere in there. But if it's some sort of specialty electronics manufacturer, that's a lot harder to do, and they may not actually know how much that's worth.
So is there any value in a, probably poor choice of words, is there any reason why a company would want or need to get a valuation done when there's not necessarily one of these life-changing events looming? Is there other business reasons to do it?
Yeah, I get a lot of requests just so that they feel like they know, right? How much is this worth? What can I do to make it worth more, right? Those are my favorite kinds of clients. They're not trying to retire tomorrow, but they're thinking about exiting in the next 3 to 5 years. I love those kind of clients because that's where I can bring the most value. The reality is business owners try to sell their business, a lot of times they can't. Most of those businesses put up for sale, the deals fail for one reason or another. And even though there might be some value there, it's just the hearts are broken and they just close the business down instead of selling it. And the sooner you get started on it, the better.
So what's a good time frame? If that is my goal to sell the business, when, in a perfect world, when would you engage with that business owner? How many months or years prior to the transaction?
So my philosophy is that you should always have your business ready to sell, right? So if you own a business, you should start getting it ready to sell tomorrow. And I feel like the same thing with the house, right? Like I see it all the time where someone they paint the whole house, or they remodel it and then they put it on the market. It's like, well, why didn't you remodel that 5 years ago and then get to enjoy this nice, pretty house before you sold it, right? When I get engaged for someone like that that's thinking about selling, the goal is to make that business so easy to run that maybe they don't need to sell it, right? Because a turnkey business, one that you don't have to be present and run the business every day, those businesses are worth more than one where the CEO's there, CEO/owners, they're kind of pulling all the levers and making the thing go. So you need to get there if you want to maximize your business, which is hard, but the sooner you start doing it, the better off you're going to be.
So let's assume that I'm always trying to get it ready to sell, to your point, and I think it's an excellent point. So does that mean that I can call you, a month before I'm ready to list it? Or would it be best if I called you, give you time to impact the value of the business in some way?
So I would say at least a couple years is the best.
Okay.
Because what is going to happen is we're going to look at historical information, right? In evaluation, we usually look at least 5 years, more if you have it. But the reason is an economic cycle is usually 5 years in most industries. If your accounting doesn't match, right? What happened here, right? Everything changed. Then it starts raising questions. So the more that you can show accurate historical data, the better off or the more comfortable a potential buyer is going to be. And that's the number one killer of the deals, is actually bad accounting. It's just it it freaks people out when they're halfway through. It's kind of like, imagine going through a home inspection and then you're halfway through getting the deal done. It's like, oh, and it needs a roof and the electrical's bad. Oh, wait a second, I'm not going to pay market price or the listed price for that house. That's what happens with accounting.
So you said bad accounting. Is there, what does that mean? Give me some examples of things that a business could be doing right now or could have in their environment right now that could be jeopardizing the value of the business from an accounting standpoint.
So some of the things are, I would say, classifying expenses correctly. So if you're a manufacturer or whatever, it's important that you have your cost of goods accurate and not somewhere else in the financials. That way you can say, okay, here's my markup. My gross margin is X%. It's actually kind of surprising how many businesses don't have that properly accounted for, right? Or if you have special items that only occur, once every few years, you need to be able to back that out or demonstrate that easily. And then another thing is all the personal expenses. There's a lot of businesses that have personal expenses in there. They've got the boat payments or vacations hidden in those financials, or they might have things on the balance sheet that aren't even real, right? Like, oh, well, employee X that left 4 years ago, he owes me $20,000. Like, get that off your balance sheet, get that off of your accounting, because you're not going to get that money. And it just muddies up the water when you're trying to get the business sold.
So are there different types of valuations, like levels or types? Just educate us a little bit on valuations from that standpoint.
So the golden standard, I guess, is fair market value, right? And that's almost all of what I do, or some approximation of fair market value. There's different levels of valuation where, hey, this thing's going to stand up in court, right, for divorce or a lawsuit, and that's called a conclusion of value. But we also have something that's called a calculation of value, which is you might see that in a buy-sell agreement if you have one with your partner, where we're going to say it's going to be our EBITDA number times X, right? Which it's nice that there's a buy-sell agreement in there, but that multiple, that times X multiple, that changes sometimes, right, through the market. So that's not always the best way, but at least it's something, right? There's a lot of times where there's nothing there for, say, a partnership where one partner passes away, right? How do we get that other partner out of there, or how do we take care of that other partner's estate that sometimes left blank and open to question? So it kind of stinks because you're not there to negotiate that.
Right. So what advice would you give a business owner that is needs a valuation and they're considering different firms to help them with this? What should they be looking for? What are some of the things that you would coach them on considering when they're trying to find someone to do a valuation for them?
So it depends on what it's for, right? If it's a very large company that's has something to do with, like, say, the stock owners are suing the management of the company, that's a big time, deal with, where just a little bit, a little tweaking in the math means millions of dollars, right? So you probably want a bigger firm for something like that. I always try to recommend that you have a valuation specialist do it, right? So someone that is purely focused on that, purely focused on performance valuations. Those are the biggest ones. Something that I try to do that you don't often see is that I try to give the owner ideas that can help generate more value for the business, right? That's actually sometimes explicitly discouraged in the industry, but I think that that's because so many people practice in the litigation, right? Like you may be seen as too friendly with with someone that has engaged you, right? So say I got engaged by a business owner and they're going through a divorce and I'm helping this business owner do more things. They may say, oh, well, your valuation is slanted because you guys are golf buddies now, right? So there's a reason why some people have that approach, but that's why I like that business owner that wants to retire in 3 to 5 years.
Right. So what are some of the biggest drivers that drive the value of a business? I mean, there's the obvious ones, right? It's like how much money does it make, top line revenue, and imagine profit. But are there other things that are more nuanced or that maybe aren't just immediately obvious that drive value of a business?
Well, cash is always king, right? How much cash does this thing generate? But a lot of times it has to do with potential, right? Things that are getting hot. Right now, I just happen to have a bunch of construction and cement manufacturing, concrete manufacturing companies fall in my lap. Well, those are big right now because there's an infrastructure bill coming through, right? There's growth in Houston. So all these businesses, I mean, I've been engaged because they're getting unsolicited offers to sell their business. Oh, this guy offered me X amount of dollars. Is that a good number? Right? Like maybe I'll take it if that's a good deal. So that sometimes drives. A lot of times it could be consistency, right? Someone that if your business consistently delivers, it's not too much up and down. Like certain industries here in Houston can be sometimes. That is very good as far as getting a good sales price for it.
What about quality of your customers? Is that you're working with household brands and or well-established companies? I mean, does that impact the value of the business?
That can impact the value, the quality of your customers, but I wouldn't say it matters that much because as long as there's enough of them, and you do need to be careful to not have just one certain important customer. You'll end up actually getting a discount on your business for that because if you're getting 80% of of your revenue from some Fortune 500 company, there's risk in that. That company might get mad at you and go somewhere else, right? There go 80% of your business walks out the door, or they might try to beat you up on price and then your profit gets pushed down. So it's always good to have a diverse mix of clients.
Yeah, I can see that. So, we obviously we're a marketing firm, sales and marketing firm. We work with business to business clients every day to help them grow their business. I'm wondering how much do you look at the processes within the business? If they have a predictable process for generating new business consistently, does that impact the valuation whenever you're going through your process? Do you look at that and go, that's worth something?
I almost always look at every process I can because I'm looking for opportunities to build value for my clients, right? Like how do clients find you? What do you do? And I would say that a lot of companies it's pretty lacking, right? It's all like word of mouth or surprisingly a lot due to word of mouth still. But that is something that can generate value. But I think that having that in place, it's going to be apparent, right? I've seen companies that, in 3 years, they're a $20 million company because they have that process. Where other ones, they've been in business 20 years and they're a $3 million company, but it's because they're word of mouth, right? And so it shows if they have that kind of process, and I'll say, whoa, how'd you go from 0 to 20 that fast? It's usually because they have a very good sales process that's allowed them. I mean, that's a lot, really. Depending on what it is, that's a lot to go from 0 to 20. But you got to have a good sales process in order to do that, and an ability to handle growth. So
does having that process suggest that, well, if they went from 0 to 20 in this example in some period of time, that in that same amount of time they could go from 20 to 40, and so that means that the risk associated with the business is low and thus the value is higher?
well, no, it's the potential growth is higher, right? If you're, hey, I'm growing 15% year over year, that is usually, a lot of times that's captured in the valuation, because what we do, part of the valuation, we, I talked about cash being king. One of the things we do is what we call the income approach, which is basically doing cash flow projections, right? So if we're growing 15% and you can show that you've done it in the past, then you can build at least some of that. You can't grow, 15% forever, but you can say, hey, the next 5 years, we're going to do it. And this is how we've been able to do it in the past. Well, okay, we can build that in for the next 5 years. I'm not going to be comfortable saying you're going to do it for 20, right? But you can build that in, and that will help you when you're selling.
So I'm not above asking unfair questions, and so I'm gonna ask one here, and you can just tell me there's no answer for it. But okay, so let's say you've got a business owner, and he's like, I'm selling this business in 90 days. I've got 90 days to increase the value of the business. What are the 1, 2, or 3 things that you tell him to do whenever he leaves your office?
Yeah, that would be really, really tough. I would probably hand him off to a business broker if that's what he wants, because a business broker will list it and post it like a realtor, right? And get that
Right.
thing out there, where there are others that will try to find the right buyer. So there's fair market value, which is what I do my valuations on. But what you want to sell your business for is what's called investment value or strategic value, right? Someone that's going to pay more for your business than anyone else because they need it for whatever reason. But if you're, it's a fire sale, right? Make sure your accounting's correct. Try to lock in your management team so that a owner, potential buyer, doesn't have to worry about your manager walking out the door as soon as he gets the keys. So lock them in for at least a year if you can. Some that's fair, right? Because they want to be treated well too by the new owner. Those are my 1 and 2, right there. And clean up those accountings, like get all that garbage off the balance sheet, and make sure you've got a good hobby, something to do once you've sold that business.
A good hobby, check.
Right.
So let's see. So I guess the last thing I wanted to ask you about is, so a business owner engages you and you do your valuation. Do you ever stay around? Do you ever hang around longer to maybe implement some of those ideas or to advise them in some additional way over a period of time?
That's actually a new thing for me, is the advisory services that I offer. And the reason why is because I was getting these requests, right? What else can you do? How can you help me? And I like doing that part. Now, that doesn't mean I'm specifically going to do it, right? Like, hey, your sales operation could be working so much better, or your accounting needs to be cleaned up. I'm not the guy to clean your accounting, right? But I know a guy that does just that, right? I know a guy that can help with your sales. If you got a production issue, I know a guy that can help with your production. But so I do like to do that as often as I can. And that's really fun because you can see it. Like I've had business owners come in and they're not sleeping at night because something's happened. They've got some sort of issue. What's going to happen to my family if something happens to me? And we can resolve that, right? Like where you don't have to sell the business, but you can take these steps so that if something were to happen, the value of the business isn't going to collapse in on itself and your family is going to be taken care of. So they can sleep at night, right? Like maybe they still have some stress, but hey, at least they're getting that sleep.
Right.
So yeah, there's a lot that we can do that people don't think about. And it's because that's what I do, and the people that I work with do. So I try to bring specialists. I stay in my zone and bring specialists to come solve their problems.
So what are some of the industries that, or markets or segments, however you want to phrase it, that you have experience working with, that you really focus on?
So my focus is on manufacturing, right? I've been developing that focus, and now it's really kind of coming to terms. I'd say 60% of everything that comes through my door is manufacturing, some sort of manufacturing. There's a lot of it in Houston. I don't think people really realize how much is here beyond oil and gas. I almost do nothing in the oil and gas these days. But so I do a lot of manufacturing, all types. I see, and then everything else could be, anything, doctor's offices. I've seen a lot of doctor's offices, seen bars. I mean, everything comes through here. But yeah, manufacturing is where I like to play the most.
That's cool. Well, I want to make sure that the people who are out here listening, who are maybe thinking they need to talk with you, that they know that you can help them regardless of what type of industry they're in. If you can't help them, I'm sure you know someone who can. So I don't think it would ever hurt for them to reach out to you. So speaking of reaching out to you, first of all, thank you so much for joining me today. What's the best way for people to connect with you?
So the easiest way, I think, is just to come to my website. It's mfgvaluation.com. And it has all my other contact information on there, and my LinkedIn. So you can find me on LinkedIn. You can find me there at my business line, 281-598-8141. I'll take your call. Or you can email me, and it's acardiel@mfgvaluation.com.
Perfect. Well, we'll make sure that we have all your contact information on our website with this, the recording of this podcast. And so we'll have that for people who are looking for you. So just head to our website, prosalesconnection.com, and you'll find it there under podcast. So before I wrap it up, I want to take a minute to thank all the people who've started to follow the podcast. It is exciting to see the momentum building and inspiring for me to continue to find other great people to interview like Anthony here. If you know a business owner or CEO that is considering selling their business or needs evaluation for any reason at all, please share this podcast with them so they can benefit from learning what Anthony has shared with us today, around the valuation process and what are some of the things to consider whenever you're trying to figure out what the value of your business is. If you like the conversation today, I'd be grateful if you could give us a 5-star review or leave us a 5-star rating or leave us a review on iTunes. That's always super helpful. Just taking a few seconds to do that will allow more people to find this podcast and allow us to reach more people and impact more lives. That's what we're here to do. So thank you for listening. And remember that B2B leaders grow companies faster when they focus on the big 3. Thanks and have a great day.
Pro Sales Connection is a sales and marketing firm that has been helping B2B companies grow faster since 2009. Learn more about our proprietary fastest path to revenue process for B2B companies. Experiencing the possibilities begins with a short 15-minute call. Schedule yours at www.prosalesconnection.com and click Get Started.